Hello everyone, welcome to my paper presentation at BLM2 ICAM4 conference. Today I will present my research work on topic COVID-19 information consumption and stock market return. I am DEWAN MUKTADIR-AL-MUKIT from University of Liverpool. Let's start with background of the study. We know that there is growing potential threat and risk in financial market due to long prevailing of COVID-19 crisis. According to recent report of UNCTAD, the coronavirus pandemic could cause a loss of more than 4 trillion US dollar to the global GDP for the year 2020 and 2021. And in another report, the Telegraph said that $1 trillion losses has already made in global stock market due to COVID-19. Therefore, this uncertain situation results in more COVID-19 information attention from the stock market participants. And in this context, our study aims to investigate how stock market return is affected by the COVID-19 information attention. Theoretical proposition. Our study is based on theoretical proposition of investor attention and asset pricing. As literature suggests that investors tend to explore a specific set of information, and since people are required to stay mostly at home during COVID-19, therefore this may tempt investor for COVID-19 information discovery mostly through searching on the internet. Therefore, it is expected that their current investment decision will be mostly affected by the COVID-19 information attention. So, we address the empirical question whether investor attention to COVID-19 information search on internet in respect to case, death, lockdown and vaccine has effect on the stock market return. Literature review and hypothesis. And there is growing literature on COVID-19 and stock market return. However, our study is more relevant to those studies which explore investors' sentimental effect on stock market return. Prior studies report that negative sentiment of investors negatively and positive sentiment of investor positively affects stock return. Accordingly, we formulate our hypothesis as our first hypothesis, that is stock market return is negatively related to case and death information search during COVID-19. And our second hypothesis is that stock market return is positively related to lockdown and vaccine information search during COVID-19. This is the research method. So we use Google search volume index to proxy investor information attention in respect to case, death, lockdown and vaccine. We have chosen these keywords as other synonymous words have low search traffic. And the following official declaration of COVID-19 name by WHO on 11 February 2020, we choose our sample period from 12 February to 30 November 2020. Our study sample consists of stock index return from 3 developed markets of USA, UK and Australia. However, we have chosen these 3 countries based on several criteria. First, we took only English-speaking country to capture exact Google search term. Second, there should be no access restriction on Google like China. Third, there should be wide availability of internet. Our another criteria is that the sample stock market should be more efficient with more informed decision making by market participants. And lastly, the sample countries should represent major stock markets, where our sample countries share about 62% of total world equity market value. This is our baseline regression model. Our dependent variable is daily stock market return. Our four independent variables are COVID-19 case, death, lockdown, and vaccine information search on Google. We control two country-level variables as GDP and uncertainty aversion in investors. So this shows the detailed description and the source of this data. This is the descriptive statistics of the study variables included in baseline regression model. And we find that during our COVID-19 sample period, the stock market faces negative return on average. It also shows that among four keyword search, investors pay more attention on COVID-19 death information. A correlation table, it shows that there is significant and positive correlation of market return with COVID-19 lockdown and vaccine attention. This is the result of pooled OLS regression on baseline model. We find that our COVID-19 lockdown and vaccine information attention, this both positively and significantly affect stock return, which actually supports our second hypothesis. In contrast, we do not find any significant impact of COVID-19 case and death information attention on stock market return. This table shows the regression result when we add additional control variables. So these are some additional control variables. So we control financial support by the government, past return, confirmed number of daily COVID-19 case and death, stringency index for government intervention, and press freedom. After including these additional control variables, you see that our results remain almost same. And this is the detailed description of this additional control variable. To keep further insight to our results, we divide our sample periods as initial 90 trading days and after 90 days. We find that for initial trading days, COVID-19 lockdown and vaccine information attention positively and significantly affect stock return. Moreover, we also find COVID-19 death information attention negatively and significantly affects stock return. On the contrary, after initial 90 days, only COVID-19 vaccine attention significantly affects the stock return. This table shows results of additional robustness test. In column 1 to 3, we have used random effect model with different combination of day, month, and country fixed effect. In column 4 to 6, we rerun our baseline pooled OLS regression with different combination of day, month, and country fixed effect. In column 7, this shows the result when we winsorize our variables at 1 and 99 percentiles. In all models, we find qualitatively similar results to our initial findings. So this is the final discussion and conclusion. Our study reveals how investors react to the stock price in relation to COVID-19 information attention. The positive impact of lockdown and vaccine suggests that investors feel confident and expect reversal of economic downturn following imposed restriction and vaccine efficacy. However, our measurement of information attention through Google Search Volume Index captures mostly retail investor sentiment, and therefore there may be diffusion in the findings when we considering the information attention by institutional shareholders. Finally, future study may consider industry-wise difference in our results. Thanks everyone for attending my presentation. So if you have any feedback or question, you may contact me at this email address. Thank you.